PPLI is a form of variable universal life. It's an insurance contract that differs than traditional insurance in that the policy owner can select the investment component inside of the contract. So normally for term insurance, for example, there is no cash value component. It's just a pure benefit in the event of a mortality. For cash value insurance, they fall into two categories: whole life insurance and universal life insurance. Whole life insurance is almost like a dividend. It might be 5 or 6% every year is given by the carrier. Universal life might be tied to more of a stock market indice like the S&P 500 or a money manager like Fidelity, who would manage the capital in a form of a mutual fund. Variable universal life, which is this form of private placement life, is a component of it, is an idea that you would select the actual investments inside of the contract. You would hire a money manager. It could be your existing money manager. It could be a fund which is focused on insurance contracts as the clients in the fund. It could be other assets that you choose to put inside of the contract. There are clients that might put things like real estate. It could be art. It could be loans. It could be a variety of investments that are not normally available to insurance policy holders. Private placement life insurance allows you to put those investments inside the policy. Those investments can appreciate tax-free like any cash value inside of any insurance policy. These products are not guaranteed the way that universal life contracts or whole life are guaranteed for your principal. But if you select the investments and you're comfortable with those investments and you hire a professional advisor, all those gains could be completely tax-free. Now, if you wanted to access your funds without shutting down the contract, you could borrow against the cash value, like any insurance policy cash value. You could borrow in a tax-free nature if structured properly. So it offers a compelling investment option for people that have assets which are highly taxed. If those assets are shielded inside of a contract, all of that taxation could be eliminated. And that's the most compelling part of private placement life insurance, is the optionality that you have to select the cash value options inside of that contract. For the past several hundred years, life insurance has offered incredibly compelling, tax-efficient aspects to owning contracts. These contracts allow for any cash value inside of them to appreciate tax-free. Private placement life insurance, or PPLI, offers policy owners the opportunity to place portfolios of assets, stocks, bonds, hedge funds, real estate, could be any hard asset. If a third-party manager is hired, so you cannot put your own local business that you run inside of a policy. It would have to be an investment that you make. It could be private equity, it could be venture capital, but you cannot control the purse, as the term goes. You cannot control the checkbook of that business. So if you invest in a private equity company, you're not running that business. Any of those investments inside of an insurance contract, a PPLI contract, can appreciate tax-free. And you could access those accounts in a tax-free manner if you borrow against the cash value.